And so you need to measure your business against your BPL, against what you're trying to accomplish, not what someone else is doing, what you're trying to do. So I weave in alpha throughout the book in that regard.
I can't wait to introduce you to Knowing Me, Knowing You, the Know Me podcast where the future of financial advice starts with discovery. We're bringing you candid conversations with top industry leaders, innovators, and behavioral finance experts, exploring how wealth managers can deepen client relationships, personalize advice at scale, and drive real business growth. Because clients don't just want financial plans, they want to feel understood. They want to be known. Stay tuned, subscribe, and get ready to transform the way you connect with clients. Know Me, transforming discovery into growth. Hi, and today we're excited to welcome Steven Tenney, founder of Grandview & Company, a strategic advisor and coach to RIA leaders who want to build not just successful practices, but enduring, growing businesses. Steven brings more than 30 years of experience in wealth management. He spent 26 years at Payne Weber and UBS before launching an RIA, which he grew to more than $650 million in assets. Through that journey, he experienced firsthand the challenges that many advisor firms face, balancing client work with leadership, growth, and long-term planning. Today, through Grandview & Company, Steven helps RIA leaders transform their practices into scalable, high-value firms. His work focuses on three core drivers of success: succession planning, growth acceleration, and margin expansion. Steve is also the author of a new book, RIA Succession Alpha, where he shares his insights on how advisory firm owners can maximize the value of their businesses while building smooth transitions for the next generation. Steven's approach is grounded in real experience, having navigated the same challenges himself, from building teams and systems to preparing for eventual ownership transition. Today, we're going to dive into what makes a successful RIA business, why succession planning is often misunderstood, and how advisors can build the firms that thrive beyond the founder. Steve, I'm so happy that you're here. Welcome to the Knowing Me, Knowing You podcast.
Thank you, Marla.
It is a delight that you join me today, and I hear this all the time. I heard a lot of people say, RIAs are good at getting to know people. They're not that great at building businesses. I'm curious, in that context, or in any context you like, what is the most exciting to you about the moment that we're in right now related to the future of wealth management?
Right now, I think, Marla, it's this convergence that's happening. On the one hand, you've got a large number of advisors retiring. Cerulli puts out about 38% of advisors in the next 10 years, which currently advise 41% of assets. That's a lot that's moving on. And they've got this major challenge with succession planning, two challenges. One is valuations are high. That makes the math of a transition difficult. And the other is a lack of a G2 or a lack of a qualified G2, or maybe there's just lack of comfort with the G2 that exists. So you've got that dynamic going on, sort of a challenging succession marketplace or industry. Pair that with an ecosystem that has evolved incredibly in the last 2 or 3 years, but certainly over the last 5 to 8 years. The services, the products are tremendous, and people are much more aware of them. They're getting much more advanced. And so it creates this dynamic.
The market, like clients and prospects, they're demanding these new products and these new services. Is that what you're referring to? Okay.
Absolutely. Yeah. And so you've got this dynamic where the younger advisors, let's call them 35 to 45 years old, who have been in the industry for a bit, they've been advising clients for a bit, they've been through some challenging markets, not quite as many as I have or others with a few decades under their belts.
I'll raise my hand. Those of us that are starting to get, we've got some grays going. Yeah.
So they've got some experience, but they're not encumbered by legacy thinking and legacy technology. And so they've got amazing opportunities to build great businesses while retiring advisors need to put their clients somewhere. And in some cases, clients might just want to be with a younger advisor, or the next gen wants to be with a younger advisor. So I think the opportunities for that next gen are tremendous. I'm really excited about that.
Fantastic. I agree. So I think the stat is 100,000 advisors that are retiring, right, in the next decade, like over a third, as you said. And couldn't agree more. I think that we definitely hear tech a lot. I love that you're talking about, no, it's actually the people. It's the people, and it is their demand, and it is, the future belongs to the young. And that's true in wealth management as well. And I love that you're kind of embracing that in how you're helping advisors plan. Tell us a little bit about how you got into this business, why you wanted to consult advisors on growing good businesses, and what you're doing right now.
Well, I got into the industry way, way, way back when Paul Volcker was the Fed chair, excuse me, Alan Greenspan, excuse me. It was the middle of '93, and my dad was an advisor from '74 to '01. I was at State Street Bank at the time and applied for a promotion, a higher level job in the securities lending desk. And there were about 140 people that applied. It was one of the three gems that people wanted to be a part of. Three of us got through to the second interview. And so I went in very prepared. I said, look, this is what you need, and this is how I can deliver it to you. I was like 24 years old, and I thought I knew everything in the world. It was maybe not appropriate, but I did it anyway. And I walked out of there feeling on top of the world. It felt absolutely incredible. And my parents were visiting. It was a foggy day in April. We were in Arlington, Mass. Went for a walk, and my dad and I just took off. And it was we were a good 10 steps in, and I started sharing this whole story. Dad, I told him what he was looking for, and how I could solve the problem for him. All excited. And my dad is a very thoughtful, intentional person. And he just paused and said, "That's what I do every day." And I thought, wow, tell me more. What are you talking about? I thought you were a stockbroker. And he solved problems. That's what he did. And so, that led to me starting out at Payne Weber in August of
Is that where your
'93.
dad was?
Yep. Yeah, he was in Portland, Maine. I was in Concord, New Hampshire. I built my book there for 4 years. Then I joined him back here in Portland for 4 years. Then he retired, and the firm, or the team, sort of evolved from there. In May of 2019, we launched an RIA. At the time, $480 million was our target. 6 months later, we were 500, and when I left 5 years later, we were at $650 million. So very successful. And I left and started Grandview and Co. because I had an incredible desire to work with business owners of any type, and I knew a thing or two about the RIA industry. Put those together, and I started Grandview and Co.
I love how you told the story about your interview and your walk with your dad. You took me right into that walk with you, and that was really beautiful. And I think that's how life evolves. So thank you for sharing that. You have been through several mindset shifts. You were at a large advisory firm, big name, and you launched your own RIA. You have been kind of in the more asset management side of the industry. We can also get geeky on that, and how nobody really knows about securities lending, but it's actually the trick for how they actually make money. So, um, but yeah, we can get super geeky on that one day. But tell me about the mindset shifts. Like, what did you have to shift in your mind? 'Cause going to this, to be fair, I'm sure when you did it, there was a little bit of a chip on the shoulder if you're in asset management versus wealth. It was the people that kind of maybe were a bit more pedigreed, more credentialed that went into asset management. And there was a mindset shift that you were totally focused on solving the problem. So tell me a little bit more about that transition mentally.
Yeah. So, advisor for what we call retail clients at UBS for 26 years. And I thought I owned my business. I thought I was had an owner's mindset, and I think I did relative to many people. I had no idea at all what it really took. And when you say a mindset shift, that's a very appropriate term because I now work with people to help them be very intentional about that shift. Frankly, even if they've owned their RIA for 20, 30 years, they are still fundamentally advisors, not owners, not leaders. And that's a really important distinction. I'll give you one story. We launched the firm in May of 19. And a few months later, I had a question about insurance. So I've called another RIA in the network, and I was asking a bunch of questions about, how they incorporate insurance. And then I started going off in some other directions, as I frequently do. And he said, "Steve, just so you know, it takes about 3 years to really get your feet under you when you launch a new firm." And my knee-jerk reaction was, "Oh, come on, it's me. Like, I don't know 3 years. I'm good at this." COVID hit, and I remember, so that delayed things a bit, meaning that just it delayed everybody a bit. But I remember being about 2.5 years in and realizing, oh, this is what he was talking about. And just feeling like we're settled now. We've got our systems figured out. We've got this ownership thing somewhat figured out. And the leadership, I certainly didn't have figured out, but I was working on. Leadership is very difficult. So it was getting that patience. It was learning systems like EOS. It was learning from
Explain what
just
that
got.
is. Explain that what that is for people who don't understand.
I apologize. EOS is the entrepreneurial operating system. So it's a system that's comes from the book written by Gino Wickman called Traction. There's another great book called What the Heck is EOS, which is sort of a Cliff Notes version of it. And it's a wonderful business operating system for any industry. There are fundamentals in there I use, even though I'm a solo business owner now, I absolutely use. And so I guess the other thing, Marla, is that I talk to a lot of people about leadership, about business decisions, growth ideas, whatever it is. I just want to be a sponge and learn from people as much as possible.
So you were growing in assets. Tell me a little bit about where you saw the risk. Is it and that story of, it's going to take 3 years to get your feet under you. Is that because you don't actually have an appreciation for the infrastructure and the scalability and the decisions that you make that have implication down the road early on? Is that kind of what you saw? And is that what you're helping people address earlier in their before they hit those big mistakes down the road later?
Yeah, it's about being intentional. Like, what are you going for? So I like to use the term and it's in my book, the best possible outcome, or BPO. Like, you got to know that we are inundated, and RIAs are inundated with ideas and products and services and managers and fintech and on and on and on and on. And that's hard. It comes at you left, right, and center. And if you have that best possible outcome in mind, that will act as both a filter and a magnet. It will attract, like you'll automatically say, okay, this idea, this thing works. Like this is important for us. We need to pursue this. Everything else gets filtered out much more easily if you've got that best possible outcome in mind. Now, that BPO needs to be shared with the rest of your team. The rest of the team needs to agree on it. And if they don't, or it's not talked, if they disagree or it's just not talked about, there's some more maturing that needs to happen. It's said differently. You need to share in a vision for the firm. And if that doesn't happen, then you can start going in some directions that later on you realize were not right. You're building the wrong infrastructure, whatever it might be.
What if financial planning wasn't just about numbers, but about you, your values, your goals, your vision for the future? Nomi is transforming client discovery for wealth managers, going beyond assets and risk scores to uncover what truly matters. With behavioral insights and real-time data, Nomi helps advisors personalize advice, build deeper connections, and grow their businesses. Because the best financial decisions start with knowing you. Discover the future of client engagement at nomi.com.
Let's talk a little bit about your book. And you wrote a book about RIA Succession Alpha. Before we dive into what it's about, why? Why did you write a book called RIA Succession Alpha? Tell us a little bit about the title and what is it that you're looking to actually inform the world about RIAs and succession and how that relates to alpha?
Sure. So most people are aware what alpha is, but I'll explain it in investment terms. It's risk-adjusted returns. So it involves things like beta, which is volatility relative to an index, returns, risk-free returns. And generally speaking, money managers want a positive alpha. So they want a better return for the same risk or less risk for the same return. Either one of those, you end up with an improved alpha. And I believe that businesses can be run in a very similar way. You absolutely want to mitigate risks, but you don't want to eliminate risk. You just want to be aware of it. You want to know what your benchmark is. So beta is only good if your R squared is high. We're going to get a little geeky here, Marla. So your R squared is the correlation between an index and a manager's return. And you need an R squared to be probably north of 80 or 90 for it to matter. If your R squared is 60 or 70 or below, your beta really, it's completely irrelevant. And so you need to measure your business against your BPL, against what you're trying to accomplish, not what someone else is doing, what you're trying to do. Okay. And so I weave in alpha throughout the book in that regard. It came about, another story. It was a local RIA here, large one, $8 billion. And I had a good relationship with the co-CIO and had known David for years. David, it was a personal and a professional relationship with him. And David called me up in October of 24 and said, just want to let you know, we're selling to Corient. This firm, and I'm not joking, Marla, this firm had been around for 170 years.
Wow.
That's a good length of time. You don't hear that very often.
Yeah.
The CEO and other co-CIO, Peter, was 7th generation from the founder.
Wow.
And you would think that if anyone could figure out internal succession planning, it would be them. There were obviously some challenges there. And some of it may have been the financial structuring. Some of it may have been G2. Some of it may have been looking for other opportunities. Whatever it is, if they're facing those challenges, and given how thoughtful and how good they are, it's going to be throughout the industry, and that's absolutely the case. And so the more I dug into it, I realized, hey, this is something that really needs some attention. The other thing I realized, and I knew this, I'm a certified exit planning advisor and have been for about 9 years now. And so this is very common throughout business, not just the RIA world or wealth management world, but people just don't engage in it. People don't engage in succession planning because they've got so much urgent stuff to deal with. It's the old Eisenhower matrix, urgent and important. They're in the urgent and not important box all the time. And they are rarely in the important and not urgent box. Mm-hmm. And that's where succession planning lands. And as I looked into it, I realized, well, wait a minute. All the stuff you need to do for good succession planning is the same stuff you need for good business planning. And I don't think you're going to come across a firm out there that says, no, we don't want to do good business planning. So you just twist things slightly and you've got a great succession plan.
So thank you. I was going to ask you, and why succession, but you actually went right there and why it's important. So before we started recording, we were talking about trust, and we were talking a little bit about what that means as it relates to the client and the client's view of trust. When you think about value creation, and I love how you kind of brought in the alpha, the beta, and like just the RIA as a business. Can you talk a little bit about building a business as it relates to our product? And our product is we are building trust with our clients. We are acting as a fiduciary in the way that they're managing their money to live better futures. How do you see RIA Business Alpha and the value creation in the frame of the client?
So, from a technical point of view, a successful transition or succession plan is only as good as as you can be successful in transferring the value of the firm. Is transferable value is what you're after. And what that means is not only trust with clients, but also with all your colleagues. You need people to stay in the seats. Like the people doing the work need to keep doing the work for the people that they care about so that those clients stay as clients, their assets stay, the revenue stays, and hopefully it keeps growing so that the buyer is buying a stream of future profits that they can count on. And the more predictable that stream of profits is, the higher the premium they'll pay. So
Yeah, I love that.
so how do you make it predictable? You need great client relationships. You need a great team around you, and that means that it's all transferable.
So like the business is the trust of your clients. It is how are you, as you're thinking about that trust of your clients, how are you and many are looking transition in the face, and maybe they haven't thought about it as you're suggesting nearly enough, but planning for that impact to their clients and understanding the needs of those clients. We just did a podcast that came out actually this week. I don't know when this one's going to air, but we did a podcast with Shelby Nickel,
Yep.
who talks a lot about there needs to be daylight between yesterday and tomorrow. If you're going through a transition, the client needs to recognize that what I'm going to be offering is better than the past. That G2, that next gen conversation means a service improvement. It means that I'm serving you in a better way. So you talk a little bit, and I'm sorry to kind of like go off track, but coming back on track now. When we think about building a practice, which maybe I've got a staff, I've got a team, they all know their functions. I've got, my admins and my service and my planners and my paraplanners and my PMs and my models and the tech that I use and the CRM and the whatever other tools. And a business, how do you help them think about the difference between, yeah, you could have a good practice versus I'm building a good business?
A lot of advisors who are fundamentally running a practice are primarily thinking about top line revenue, payouts, and maybe AUM. Running a business, it's a different mindset. You're thinking about EBITDA, profit margins. You're thinking about profits today and profits tomorrow. So, should I be making an investment? Should I take a hit on margins today because it will pay dividends tomorrow? Um, is my team incredibly stressed out? They have capacity issues. What do we do about that? Do we need to really examine the underlying issues? Do we need to hire someone to address those capacity issues, which in my opinion is the last step that should be considered? It's also being very intentional about who you are, what your best possible outcome is. I go back to that. And what makes you unique? Are you really that different than your competitors, than the rest of the industry? Because I'll tell you, and I think you know this, Marla, You look at 95% websites out there, and fundamentally, they are all the same.
Hmm.
And they're
Building brand also and telling your story and having differentiation really embedded into what does your business represent? Who do you serve and what do you do for those people?
right. It's asking a lot of those questions that might sound basic. They can be very challenging to answer, but also incredibly rewarding. When you get it right, you feel on top of the world, you're empowered, and you're off to the races.
Yeah, mission, vision, values, all of those things that, you go to the offsite, you get it done, but they are really impactful. They're critical. So I want to kind of carry on that theme. What mistakes do you see RIAs make time and again? Where do you see just the same things repeating, pattern, pattern, pattern?
A big one I mentioned a second ago is hiring. It's very, very common for firms to hire first. That's their first response to addressing capacity issues instead of dealing with or trying to identify what the underlying causes of those capacity issues are. For example, a lot of firms don't have workflows or processes. Those allow business to be done faster, more accurately, more predictably. They create less stress. Um, it goes back to transferable value, what I was saying earlier with succession planning. Um, and so without I'd seen that, or maybe it's a lack of investment models, scalable investment models. I'm still shocked at how few firms have those. It's far more common than I ever realized.
They're still stock picking. They're just picking funds off the shelf. They don't have a model that they're kind of adhering to and saying, this is going to be our repeatable, scalable. You kind of have a persona. Maybe it's a risk-based, time horizon based persona that you can map in and take out a lot of the capacity that is then looking at a menu of thousands and thousands of options. That's what you're referring to?
Well, yeah, fundamentally, they are trading every single account number individually.
Mm.
They never do block trades. When
Mm.
I was a senior portfolio
Efficiency
manager.
issues there too. There's revenue and efficiency issues, yes.
Oh, there's risk. I mean, there's so many challenges with that, and um, there are some people that feel that they're doing the right thing for the clients that way. I would argue they're absolutely not doing the right thing because there's no way they can trade that their best thinking always gets applied across the board. That's what you want. You want their best thinking, whether you outsource it or do it yourself. That's a whole nother debate. But when your best idea or best thinking causes a change, that change should apply to as many people as possible. If it's assuming it's appropriate for the asset allocation and objectives, fine. But very few people have these models. When I was a senior portfolio manager at UBS, when I was a portfolio manager at the RIA, you could double the number of accounts overnight, and if it weren't for unrealized capital gains, it would make no difference in terms of our effort.
Yeah.
It was technology. It was really quite easy to execute. I equate it, Marla, to basement shelves. So not everyone that is listening has a basement, especially down in Florida, but we have basements here in Maine, and we have shelves, and the shelves are full, and everyone's shelves are full. Okay. Typically, what a lot of people do is they go buy another set of shelves or build another set of shelves. Well, without buying more stuff, those shelves are all of a sudden full. All right. So the answer is not to buy another set of shelves or build another set of shelves. Same thing with an RIA. Everyone's capacity constrained. Doesn't matter how many people are there. So the answer is not go hire someone to get another person. It's to deal with the underlying issues. And then you can move on from there. Yes, there's a time to hire. Absolutely. But I think it takes far more examination than people pay attention to.
Yes, I like that. And then like having an actual architected, organized shelving system that you recognize what needs to go on these shelves so that they're actually each serving a purpose. And when we need to find that thing that's on that shelf, we know where to get it. And we
Right.
could put more there. Love it. So this time has flown by. What is an instance in your life, a conversation you've had that has changed your personal relationship with money?
I'm gonna go back to dad. So it was the summer of '89. I had just finished my sophomore year at Tufts. I was still living on campus because I was taking Spanish. I spent my junior year in Madrid, and I was also cold calling for Payne Weber at 265 Franklin Street in Boston. And the two guys that I was working for, one guy, there was someone right next door, um, and they loved looking for deal stocks, looking for takeovers. And I only knew one stock. That's it. It was called CML, which stood for Charles M. Layton. They owned brands such as Carol Reed, which is a clothing shop. Most people are aware of Norditrack or Boston Whaler. They own those brands as well. And there was a main connection there. And so that was the only stock I really knew to follow. And I'd go over to the mail room and there was a Quotron there and I'd punch in CML and I get the quote. Well, one day I see a huge block trade go across late in the day. So I called my dad, said, "Dad, something going on." Like, because he gifted me the stock at one point, and I
You were following it. He knew it was important to you.
yeah. So, and I forget why, but I didn't own it at the time, and so I call him up, and we just bought it on the spot. Didn't even open an account. You could do that. You could trade before opening an account back then. And the next morning, it was announced that CML was being taken out. So here I was, a rising junior in college, and I picked the stock. And the guys I was working with went nuts. But later that afternoon, I'm walking back to the house where I was living, and I or it was still I was at the branch, and I called my dad, and he said, "You know, it can go down just as fast as it went up." And it went from like 17 to 25. And I thought, "Oh, well, that's kinda scary." Like, I mean, stuff goes down too? And remember, I wasn't totally aware of the crash in '87, but I remember my dad leaving parents' weekend because of it. Um, and it, and that hit home, like, there's risk involved in the markets. And so, throughout my career, and even now, I really watch risk because things can turn, and this is a very challenging industry from that regard, and sometimes it happens out of the blue, um, sometimes it's far more predictable, but we've got to pay attention to risk because we're talking about clients' lives and livelihoods and, their futures in what we do. So,
Yeah.
risk is important.
I love that. Thank you for sharing the story. Thank you so much for being on the Knowing Me, Knowing You podcast and sharing your perspective on sustainable RIA businesses, succession, and the importance of G2, Generation 2, for those who are not familiar with the acronym, but thinking about who you're passing your business to and who's going to actually be holding that really beautiful diamond that you've built and carrying your legacy into the future. Where can our listeners, and there are several advisors, RIAs that listen to this podcast, where can they find you, learn about your work, find your book?
Sure. The book, RIA Succession Alpha, is on Amazon, and people can reach me through LinkedIn. I'm fairly active there. They can DM me. They can email me at stevegrandviewandco.com.
True. I think we might have even. I've got several LinkedIn friends, Steve, and you are one of my LinkedIn friends, and I appreciate for you being one of those. Our
Likewise.
listeners, yes, if you are building or want to build a successful RIA business that can thrive beyond you, if you're interested in having a better version of basement shelves that is going to sustain and carry your business to the vision, or maybe you need help crafting and defining that vision of the business that you want it to be, let us know your thoughts. Reach out to Steve, reach out to me, put in your comments. If you found this conversation helpful, if you learned something new, if you have a friend who is struggling in building their RIA business or struggling with the succession of their RIA business, if they're not really clear on what the right options are for them, please share this podcast with them so that they can learn also from what Steven has shared with us. Steven, thank you for being here.
Thank you, Marla.
Thank you for joining us on the Knowing Me, Knowing You podcast. If you enjoyed this episode, share it with someone who needs to hear it. And don't forget to subscribe, rate, and review. Your support helps us bring more transformative conversations to you. Until next time, keep discovering, keep growing, and remember, you're in control of your own financial story. Follow us for more conversations on financial confidence, self-discovery, and the future of money.